How is everybody doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Super excited today. I've got a great episode here for everybody. I've been waiting so patiently for an article like this to come out. If your bank has to raise capital, what is better? Is it better to do an initial public offering, or is it better to go to the OTC, the over-the-counter market, and basically trade shares? So I've got a great article here from Independent Banker Magazine that I want to share with everybody, and we're going to take a few minutes to go through this. We're going to point out some of the pros and cons to the IPO versus the OTC, and then we'll, hopefully see what people think at the end of the day. So this is called Growth Goals: Navigating IPOs and OTC Trading. So is your community bank thinking about launching an initial public offering or over-the-counter trading of stocks to raise liquidity? The rewards could be great, but both options come with extra regulatory requirements and costs. So careful consideration is critical. So community banks may have capital needs, and as they grow, there can be strategic reasons to turn to public markets. There are multiple ways to accomplish this task, and you need to engage in careful planning. Seek expert advice and pay close attention to details to ensure the path you are taking is appropriate for your bank, especially given the added costs and complexities involved in offering shares to the public. You could take it lightly, and it truly has to be a thoughtful, methodical process to go through the pros and cons for each institution, says Anna Arvia, principal at advisory firm Cornerstone Advisors. With that in mind, here's what to consider if your community bank is thinking about tapping public markets. Take a thoughtful approach. You should start by mapping out strategic goals on a short, medium, and long-term basis. This will help determine whether there are strategic imperatives that make tapping public markets the preferable path. For example, some banks may be able to accomplish their goals by listing shares on the over-the-counter market or the OTC market. But for others, an initial public offering could serve the bank better. This decision will depend on various factors, including your long-term goals and size, the overall size of your bank. Your existing ownership structure and the owner's plans are significant considerations in the case of a tightly held bank. If you have an 85-year-old chief executive who owns 25% of the bank and the heirs want no part of it, says Arvia, it's a whole different conversation than if you have a group of younger owners willing to add capital as necessary. You must also consider why your community bank needs capital and how much more you anticipate needing as it grows. If you are looking to make a significant capital investment in the bank or acquire other community banks, other options such as private equity may be less ideal than tapping public markets. You also have to consider the increased regulatory burden and costs associated with offering shares to the public. And of course, the added public scrutiny that could come with having a larger investor base. Don't be in a hurry, says Sean Davis, Senior Vice President and Director at $1.7 billion asset CNB Bank and Trust in Carlinville, Illinois, which has listed its shares on the over-the-counter market since September of 2018. Davis recommends banks compile as much information and advice as they can from investment bankers, accountants, lawyers, and other relevant professionals before making a decision. It's a strategic decision, he says. It's not one size fits all here. So what is the over-the-counter option or the OTC option? Many community banks, especially smaller ones, opt to list their shares on the OTC market, sometimes as a starting point for a later listing on the New York Stock Exchange or the NASDAQ. Being listed on OTC doesn't offer as much liquidity for a company's shares as being on an exchange might, but it's less expensive and doesn't come with as many regulatory requirements. It's important to note that it's also a riskier option for that reason. Many OTC stocks are very thinly traded. There's not a ton of volume there on the OTC, and that's where part of the risk complexity comes in. CNB Bank and Trust trades on the OTCQX, which is the top tier of the three marketplaces for the over-the-counter trading of stocks. The community bank decided to list OTC for liquidity purposes at the encouragement of a private equity investor, a move that has served the bank well in many ways, Davis says. There are some additional expenses to being a publicly traded company, but the added liquidity balances that out, according to Davis. He adds that since the bank was already doing a fair amount of financial reporting and information gathering to meet its existing regulatory requirements, compiling the data into a different format wasn't that onerous. Now, there's kind of a little sidebar here that says, is deregistration an option for publicly listed banks? I'm going to kind of skip over that for the moment. We'll see if we have time to come back to that at the end. So now we get into the OTC versus the IPO. So Bank of Eastern Oregon, a 480 million asset bank in Heppner, Oregon, listed shares over the counter more than 2 decades ago to create liquidity for private shareholders. About 25 to 30% of the shares are owned publicly, and the rest is owned by employees, customers, friends, and neighbors, which Executive Vice President and Chief Financial Officer Mark Lemon says is how the bank wants it. Though being listed OTC means the community bank needs to check off additional regulatory points, there are fewer requirements than being on an exchange, Lemon says. He estimates the community bank would need to generate 2 to 3 times more revenue than it currently does to absorb the extra costs of Securities and Exchange Commission regulation associated with an exchange listing. We don't need to add more complexity, he says. The burden is kind of overwhelming for somebody of our size. Management also doesn't want the shares to be owned by institutional investors who are going to push the bank to change its culture and set demands related to growth and profitability. We do things that are right for the community as opposed to what's right for a corporate structure, explains Lemon. Offering shares OTC can also be a prudent move for community banks as a stepping stone to eventually trade on an SEC public exchange. You're making incremental investments over time, and that is less of a big shock as opposed to going from one end of the spectrum to the other, says Alex Vari, Chief Accounting Officer at $2.2 billion asset Main Street Bank in Fairfax, Virginia, which transitioned from trading over the counter to listing on the NASDAQ in 2019. So what are some considerations for listing? Some community banks decide to list on the NYSE or NASDAQ due to rapid growth and a need for greater visibility, liquidity, or capital than trading OTC can offer. Each exchange has specific listing requirements and prerequisites. Main Street's holding company, for instance, had just over $1 billion of assets when it was listed as an SEC registrant. Vari says the community bank wanted to access a new realm of capital from investors, so moving from the OTC market to NASDAQ made sense. The move also helped the bank to gain attention from analysts, and it gained the potential to be included in a broad market index, which can further broaden the bank's shareholder base and raise its profile with investors. Of course, listing as an SEC registrant requires significant more time and effort than being a private bank or listing OTC. Banks that trade as SEC registrants have more rigorous auditing standards, corporate governance requirements, and additional legal work. There are also listing fees and other exchange-related requirements, as well as the headaches associated with being more prominently in the public eye. There's a bigger audience, says Cornerstone's Arvia. There's more scrutiny. There are more voices in the room than with private capital. For Main Street, listing on exchange was part of a longer strategic journey that was made easier by its growth trajectory. Crossing the $1 billion asset mark meant it automatically had to contend with additional regulatory and compliance requirements based on its bigger size. So there was less work to get in shape for being an SEC registrant and listing on an exchange. If you've crossed that threshold, you've already had to up your regulatory game, Vari says. To go from that point to an SEC regulated bank is less of a heavy lift. And then the price tag on listing. So the costs that come with listing on exchange depend on how much regulatory and audit function buildup each bank needs. Unless existing staff is experienced, banks should also expect to hire additional staff and rack up auditor, registration, compliance, and legal fees. Community banks might expect to pay $250,000 annually to be listed on an exchange, give or take, depending on the bank size and staffing, says Philip Buffington, partner with law firm Balk and Bigham LLP in Birmingham, Miss. Legal fees alone could be hefty. In its registration statement with the SEC, Chainbridge Bancorp, the bank holding company for Chainbridge Bank in McLean, Virginia, discussed some of the costs associated with being a public company. The bank noted that it expected to incur additional legal expenses associated with becoming a public company of up to about $750,000 in the third quarter of 2024. These costs include additional personnel, legal, consulting, regulatory, insurance, accounting, investor relations, and other expenses that the bank did not incur as a private company. And then finally, what are some of the incentives for listing? So Banks that list on an exchange often have express reasons for doing so. Chainbridge, for example, completed an initial public offering in October, receiving net proceeds of about $33.6 million. The $1.6 billion asset banking company used a portion of the net proceeds to fully repay a $10 million outstanding principal balance on its unsecured line of credit with a correspondent bank, according to a press release. Chainbridge said it intends to use other proceeds primarily for general corporate purposes, which may include supporting continued organic deposit growth and funding potential strategic expansion. CNB Bank and Trust is in the process of weighing its options. One advantage to listing on an exchange would be greater market visibility and marketability for its shares. It might, for instance, be eligible for inclusion in the Russell 3000 index, which would mean mutual funds would be buying the stock, which would increase the demand for shares and the price. That's a huge asset for your shareholders, Davis said. Though listing on an exchange remains a long-term goal for CNB Bank and Trust, it's not ready to pull the trigger yet, in part due to the $500,000 initial expense and $250,000 ongoing annual expense it is expecting such a move to cost. All banks right now are fighting margin compression, and this is dead expense, Davis says. Unlike the decision to add a new product line, there is no top-line revenue with this, he adds. And then then there's a box here at the bottom that says how to prepare to go public. So there's no magic number for the size you need to be to list on an exchange, but many banks that take this step are already in the range of 10 billion or more or have big growth aspirations. For banks looking to grow substantially, there's prestige to being publicly traded. If your goal is to be in the 1 billion to 5 billion level, maybe you don't need to spend the money quite yet, he says. This, too, is a bank-by-bank decision because some smaller banks do list on an exchange. Before moving ahead, community banks need to think about everything that's involved in being an exchange-registered bank. This includes having the personnel in place to do internal accounting and ongoing reporting, as well as shareholder communications and proxy materials. There are also special requirements related to board size, internal compensation for directors, and more. There's significant advanced planning needed, a process that could take 18 months to 2 years. There really is a lot of work involved, Buffington says. Alex Very, Chief Accounting Officer of Main Street Bank at Fairfax, Virginia, suggests bankers lay out their anticipated timeline and communicate with the board, management, auditors, regulators, and other stakeholders before proceeding, so everyone has a clear understanding of where the bank is headed and how to get there. Being methodical and thoughtful about the process will make the whole thing smoother, he says. Some community banks might decide it's more than they bargained for and change course, he continues, but that's okay too. Going public is not going to be the right decision for every company. So there you have it, everybody. I thought that was a fantastic article. If anybody would like to go check it out, there is a link in the description box below if you want to go check out this article. But I just thought that this was a fantastic article looking at the difference between an IPO versus, trading stock over the counter. And I think the correct answer there is it depends. It depends on, the situation of your bank. Do you have an older ownership group, a younger ownership group? Do you have grandiose plans? Are you really looking to expand in the future? Are you looking to buy other banks? Do you need to pay back line of credits like the what was it? I'm thinking about the like the line program that the Federal Reserve just had, the BT, if I'm saying that right, the BTPF or FP. But that was basically a line of credit facility that now has to be paid back. So maybe bank needs to raise capital to pay that back. Maybe they're just looking to raise capital just to fund organic growth. It could be a number of different things. But the point being is that you have to go about this very strategically, and you have to take into consideration many different factors before moving forward. And I love the advice there at the end. Just be methodical and thoughtful about how you do it. Bring in the necessary stakeholders. Talk to investment banks, talk to your lawyer, talk to your accountant. Talk to other people. Maybe you've got some people in your bank, like a board member or senior executive that has been through this before in previous jobs at other financial institutions. Maybe they can give you key insight as to the process and how it goes and what needs to be done and so on and so forth. I would say size does matter. If you've crossed that $1 billion threshold, then jumping into a lot of this might be a little bit easier because you've had to jump all those, or had to go over all those hurdles when you cross the $1 billion threshold. And now maybe you're a $3 billion bank and you're looking to become a $10 billion bank. So, you need to, get the IPO going, raise a bunch of capital, and then really grow the bank. So like I said, there could be a number of strategies for this. But I just thought this was a great one because if you don't really know much about this process, or if you've always been curious about it, this was a great article for you. If you're a bank that is maybe starting to push up against $1 billion, or maybe you're over $1 billion and you're thinking about doing this, again, a lot of things to consider here, a lot of expenses, regulatory concerns, a lot of different aspects of this to consider before you move forward with doing it. But again, like I said, love this episode, love this article, this topic. Really thought this was informative, and I hope everybody enjoyed it. But I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I would love to hear people's comments on this particular topic. And as always, remember to check out some of the other episodes on the channel, as I think I'm hoping that I'm putting out some good content for everybody out there. So, but with that, have a great day. Oh, and one last thing, don't forget, tomorrow night, BND Strategy Room will be live on YouTube at 8 p.m. So, definitely check out the live stream, and I hopefully will see everyone there. All right. Take care. Thanks a lot.